Hi, in today's video you're going to learn how you can use the rectangular price box strategy. So the ability to identify support and resistance is the foundation of the rectangular pricing pattern. So it can give you consistent results in a short period of time. So this video will help you spot the pattern and how you can use it effectively when trading. So how do you spot a rectangular price pattern? Well, let's talk about the range market for a second. Prices rise to a certain level before dropping to a different level. A higher price produces a level of resistance, whereas a lower price gives support. They are strong that once the price reaches them, it simply bounces back without breaking out of the support or resistance. Okay, lines that are parallel to one another are used to produce support and resistance. At least two bottoms will be joined to form the support line, and at least two tops will be connected by the resistance line. Okay, so take a look at this DAX chart on the screen for the last 30 minutes. When a trend is coming to a conclusion, okay, the rectangular pattern is visible. It denotes a shift in the trend's direction. As a result, the best time to look for price consolidation is at the top or bottom of an uptrend or downtrend. And what it means is that the directed movement is over and the trend is about to turn around. So prices do not exceed or fall below the specified level at this time. So when the rectangle pricing pattern appears, what should you do? Okay, so once the pricing boxes pattern has developed, it is usually straightforward to spot. Okay, but don't be concerned, you may still be able to profit from it before the new trend starts. So during the support or resistance lines should be the first initial step. Then keep an eye out for when the price crosses the lines. You should open a buy position when the support line is reached. Okay, and you can open a sell position if the resistance line is touched. So when trading short-term deals, I recommend using the large time frame chart. So if you're trading on a 30-minute time frame chart, for example, open a 5-minute trade. As a result, you may be confident that the price will remain within the rectangle and will not rebound before the trade expires. Okay, so another question is, what should you do when the price breaks out of the support or resistance level? Okay, so you must be ready for the price to break through the support or resistance level sooner or later. So it will happen. After the breakthrough, keep an eye on the direction of price is heading and trade accordingly. As the uptrend develops, you should enter a buy position if the price breaks through the resistance level, as seen in the example on the screen. So to conclude, the price boxes pattern lasts for a while, and during that time the price fluctuates within a set range. Finally, when the price momentum is really strong, the barrier is broken. There are certain signs that this is about to happen. For instance, the candles are longer and of the same color. As a result, you have every reason to believe the market will still continue to move in the breakout direction. But of course, there might be a retest, so make sure that your stop loss is not really that tight. So if you learned something from this video, give it a like. For more videos like this, go on and subscribe.